What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today we want to talk about the best strategy that you can use to make money if you are a beginner and if you are losing money. So if you are losing money in the Forex market, it just means you have a very bad strategy that needs some panel beating. So today I'm going to show you a very good strategy that you can use, and this strategy is anchored on order blocks and market structure. So it's a very simple strategy. After showing you the examples, I will show you what you need to do in the live markets, and I'll show you a live example that you can take with this strategy. So if this is something that interests you, like this video and share. So let's get right into it. So guys, what we need to do is to understand that price moves by oscillating from higher levels or higher prices to lower prices, as you can see from what you are seeing here. So this is how price is moving, right? So price is moving like this. So what you need to do is to understand what is happening when price is making these moves. Remember, we are having what we call ranges from this point to this point and this point to this point. And if you need to identify this realistically, you will see that this part of price moves like this, right? Then you will see that this is an impulsive move, then corrective moves, impulse, corrective move, impulse, corrective move. So these are the two things that you are seeing on this one, on this particular chart. So for you to understand where price is going or what is happening in the market, you have to understand that after every corrective move, you get an impulse move. After every corrective move, you get an impulse move. The job or your job is to understand where this corrective move ends. And remember, guys, I'm going to show you again how you get entries on the lower time frames using this simple strategy, right? So what you need to understand is the direction of the impulse is the direction of the what? The direction of the impulse is the direction of the trend, right? So if you're looking at this, you can clearly see that this is the impulse, right? These are the impulses, and this just means that we are in an uptrend, as you can see like this. So this is what you are seeing. So before we go any further, let me tell you about this broker that I'm using. This is TIOmarkets, and TIOmarkets is the best when it comes to spreads, when it comes to leverage, and they have up to unlimited leverage. So this is what you get when you, so for some of you who trade news and things like that and go full margin, this is the broker for you. And as you can see, we have every commodity, every index, every forex pair that you might need, and we have every account for every trader. We have the spread account, standard account, VIP, and VIP Black. You choose what you need, and you can choose from USD, pounds, and rand account depending on your needs as a trader. So let's get back to our strategy. So what we are doing here is simple. Remember, I was talking about how you need to identify the impulses. So if you look at this, this is gold, right? This is gold. Let's start from here. So if you're part of our Telegram channel, you see that I posted this as a what? As a setup. And if you need more setups, you might do yourself a good thing by joining our Telegram. So what we are doing here is simple, right? So let me just use an arrow so that you can see what we are doing in terms of analyzing this particular chart, right? Number one, what do you see? You see that we have an impulse here. So let's just start here, because here you can clearly see again that we had that. We have an impulse here, then we have a corrective move, impulse, corrective move, impulse. Then after there, we took out the high of the impulse. Remember, when you are looking at the highs and the lows, you need to consider only the swing highs of the impulses and the lows of the corrective moves. So here, this is the high of the impulse, and price moves and breaks that, meaning we have a new impulse to the upside, which is this one, and we have a corrective move here, an impulse, a corrective move, another impulse. And if you look closely, you see that this was the low of the impulse, and when price came, it took out this low, and this means that we have a new impulse as it is, right? So what we need to understand is when price is at this point where it is trading, right, you need to understand what is happening. So what is happening here is this. So from what I'm seeing, I don't know what you are seeing from that other side of the screen, right? We have the impulse, then we have a corrective move, impulse, and this is a corrective move. And this is where we need price to get to so that we can go down. So remember, when you have understood the impulses and the corrective moves, what you need to understand is the points of interest or the moments or the areas of support and resistance, or the areas of demand and supply. So how do you understand demand and supply? It's simple. Let's just get back to what we were saying. Remember, we said this, that when price is moving, it's having what? Impulses and corrections, right? So this is an impulse and this is a correction. This is an impulse, this is a correction, impulse, correction, right? From this point of view, you will need that to understand that at every beginning of an impulse, right, you are going to be having some demand areas in that impulse. And this is another example where, let's say this is your demand area, right? And you are going to be having some demand areas again. As soon as price moves away from a zone and gives you an impulse, right, you identify your demand zone and you wait for price to correct back to that demand zone. Then you can enter that particular pair, right? So remember, I said I'm going to show you an example, an entry that we are going to be using, right? So remember, this is your supply zone and this is your order block, right? This whole area there. So let me just put a brush there so that you can see what you're saying. So this is your area and this whole area is your supply zone. So as price has corrected back to this supply zone, what do you need? You need to see price going down and maybe taking out this low of this corrective move, right? So after understanding that, you go to the M15 and try to get your entry from the M15. So right now, let's go back to the M15 and see if you can get this on the M15 and if you can get the entry on the M15 here. What we need to see is this. Remember, I said when an impulse is going up, it's like this, right? And a corrective moves will come in like that, right? So on the M15, this corrective move will be very defined, as we will see the highs and lows of a trend like this, right? So what you need to understand is simple. What you need to understand is that when price is correcting on the M15, you mark out the highs, right? As soon as price breaks one of these highs, then you are waiting for a retest of that break or the retest of an order block like this on the M15, and you go. Let me show you this example clearly using a sell example, because here we are having a sell, right? So the impulse is down. Remember, the impulse is down. The impulse is down and the corrective move is moving up like that, right? So on the M15, this corrective move will look like this. So, and these lows and the highs will look like that. So what we need is for price to break a low like this. When price breaks a low, what you're waiting for is a retest of either the supply zone up here, or this particular break where you are seeing a break and retest here, where you can see price retesting this break or price retesting that particular supply zone. But most of the time, a lot of traders are confused on what to consider, either this break or either this order block. So what I need you to do is simple. I need you to enter as soon as price breaks. Not as soon as price breaks, as soon as price retests the break, right? You wait for price to break, then you wait for the retest, then you enter, and you compensate this entry by putting your stop loss above the structure or above this order block there, and you target the base of the corrective move. So with that being said, let's just go and see how we could have taken advantage of this particular trade that you're looking for. And remember, right now, at the time of recording of this video, we are in the London session, and we are right into our trading session. So what I'm saying here is actually live, and you can verify with the time, because here's the time, UTC, right? You can see the time and you can see that this is a moving chart, right? And this is gold. You can verify everything, right? So what do you need here? Remember what I said. I said you will see a corrective move that moves like that, right? And what you are waiting for at that corrective move is simple. You are going to wait for a break of a low, as has happened here. So this low has been taken out, as you can see on this chart at this price, right? So what we want to see here is a price expanding lower to these areas here. So what you need to see here is simple. Here you can enter your sell positions here. You can enter your sell position like this. So this is your sell position. The stop loss goes up and you are targeting the lows down here. So this is how you are going to be doing it, and your risk to reward ratio is going to be what? 1 in 5. So that's the beauty of this. If you take 10 trades like this, some of those are going to go right to the stop loss, and some of those are going to go to your take profit. But in the long run, if you put them together, maybe 100 trades or things like that, you are going to see that you will be in profit. So if you are a beginner, if you are a struggling trader, this is the strategy that you need to be employing and that you need to follow religiously. So just a recap of what we were doing so that you don't confuse yourself. Let me just give you a quick recap. Remember, price moves like this on the what? On the higher time frames, price moves like this. And after this, what do you understand? You understand that after every impulse, as I said, right, you are going to get some demand zones like this. So when price then corrects back to the what, to the demand zone that we have marked, maybe price does this, it's correcting, and as soon as price gets here, you go to the lower time frame. And if you go to the lower time frame, you are going to take this part of the chart, which is the corrective move, and on the lower time frame, it's going to look more like this. And what are you going to wait for? You are going to wait for what? For a break of a what? Of this high. And this high is going to be a what? Entry signal, right? When price breaks that, you are going to wait for a retest of that. And after retest, what are you going to do? You are going to put your what? Your buy position there, and you are going to enter at that particular point. Your stop loss goes below the what? The structure, and you target the high, and you're going to be having something that looks like that. And if you go to a real chart, this is what it looks like. This is what it looks like in real markets. And what you are just going to be doing is to wait for it to finally expand and do. And if you want to see how this moves and how this pans out, you might as well join our Telegram. The links are in the description down below. And don't forget, if you don't have a broker to trade with, and if you need a reliable broker, we are talking about TIOmarkets, a top rated broker that delivers in all that it does, right? And remember, you can utilize their account with unlimited leverage, and you can trade whatever you want at whatever position you want with very low spreads. I've never seen a broker with such low spreads in this market, and I've been around for a long time. So guys, I'll see you in the next video.